Hey everybody, JJ here. It is Sunday, October 4th, 2020. Appreciate you being here. You might have noticed I haven't put out a video in a couple days. Got a lot going on here. We actually had an ant infestation in my home, and it took a while to find out where they were coming in. We had to actually tear up some artificial grass that we have in our backyard. And yeah, love the artificial grass. Being in California, I don't want to have to waste a bunch of water watering grass every day. That's why I don't have real grass. One, waste of water. Two, waste of time and energy mowing the lawn. And if you don't water it after a couple days here in California, it just dies. That was a pretty big project. But ultimately, we found a way to rid the ants of our home in a natural way. We used essential oils combined with water, so we got rid of them in a very safe way. So I'm happy to say that, and thank you for coming back after taking a couple days off. Typically I'm pretty consistent on everyday videos, usually at least 6 a week, on economics, the financial system, the stock market, investing, metals, and lots more. So let's get into some important recent news here. Out of Reuters right here, U.S. banks report record profit plunge as pandemic recession takes hold. Well, it's been 6 months since the economy started shutting down. It's back in March. And now they're saying this pandemic recession is taking hold. Wow, just taking hold. I thought we were in a recovery. Well, maybe not for the banks when it comes to profits. Now, there's a few different reasons here. Ultra low interest rates are cutting into the bank's profits, but we're also seeing much less spending. Less people going to theaters, less people going out to eat. A lot of the restaurants are just at a fraction of capacity here in California. I believe it's 25% capacity, and then you can do outdoor dining. A lot of people don't want to sit in a parking lot and eat their food. And that's just the tip of the iceberg. Much less traffic at bars and clubs, depending on the area. All right, but back to the banks. U.S. big commercial banks closed their books on the third quarter. Analysts expect them to report a 30 to 60% plunge in profits on the year due to the shutdown-induced recession and near record low interest rates. Also, you have less people traveling, less people swiping credit cards and shopping. Now, you may have noticed that the mega corporations are reporting surging profits. Well, that's because a lot of the competition has been wiped out, literally. It's a small business bloodbath here in the U.S. And the mom and pop shop is lucky to survive. In some areas, half or more than half of small businesses are not coming back. Permanent closures. But yet they're only going to tell you to look at the stock market, and they're going to tell you to look at the profits of the mega corporations to try to convince you that this economy is coming back strong. They'll also point to the manipulated unemployment number, and we've discussed that here many times, how the numbers are basically cooked on the unemployment statistics. So on one hand, you say good news, the banks are not making as much money, but what they're going to do is they're going to use that to probably lay off a lot of frontline people, but yet the people at the top, the executives, the CEOs, they're still going to make their salaries. They won't get laid off, and they'll probably get a bigger pay raise than the rest of the company will get. Speaking of less people going out and spending on non-essential things like entertainment and dining and going to clubs, AMC Theaters may not survive. This comes to us from the Hollywood Reporter. AMC Entertainment, the largest movie theater chain in the world, will potentially be running out of liquidity in about 6 months. And that's according to debt ratings agency S&P Global Ratings, which downgraded AMC's credit rating from CCC plus to CCC minus and hit it with a negative outlook. I mean, I don't think anybody should be surprised about this. When you see people waiting in 1 hour, 2 hour, 3 hour food lines, you got to expect the traffic of these movie theaters and sports games to start dropping by a lot. Now, the sports stadiums, I guess some stadiums you still can't go in person. Actually, I clicked by a couple football games today. There was actually real fans in the stadium and the seats. They were spread apart, so it was limited capacity, or limited seating probably rather. But at the basketball, I watched some basketball clips, and they had actually fake fans sitting in the seats. I guess to try to make the players feel a little bit of adrenaline with an audience watching, a fake audience. But yeah, the movie tickets, I mean, pretty outrageous. If you go to see a new release, you're talking $15, $20, and even higher at some theaters if you're looking at one of those luxury theaters with the reclining seats. And then add on top of that, you know, $4 or $5 drinks, $7, $8, $10 popcorns. You could easily just a couple of two people for a date can easily go out and spend $50, $60 just on a 1 to 2 hour movie. So I think there's a lot to it. People are still sketchy about the illness, and they don't want to go out, especially in theaters and touching a seat where other people have been sitting. But you also have the economic point of it. More people now are saving, less people spending. But I think the big factor is fear of the economy. And you see all these job losses, and the people that do have jobs, I think they're much more conscious now of their spending. So hopefully this will wake some people up to reality that a lot of us are just 1 or 2 paychecks away from being on the street and waiting in a food line ourselves. Speaking of long lines at food banks, another article here, this is in Hawaii. A mega increase in people needing to get handouts, and food lines are surging. The Hawaii Tribune Herald reported that the shutdown-induced recession on the island has been so severe that Hawaii Food Basket, one of the island's top food banks, has significantly increased its services since the start of the shutdown recession, serving 80,000 people a month. Right? So this virus shutdown, this recession, this Great Depression 2.0 is getting worse. There is no recovery. Yes, they can point to the stock market again. They can point to the manipulated numbers, the unemployment numbers. But this is what's happening on Main Street. This is the reality for millions and millions of people. And it's just really, again, mind-blowing to me how people can really believe that we're in some sort of economic recovery. I mean, people, you got to realize how long we've been lied to about so many things. And the economy is just part of it, right? They don't want people to panic. They don't want people to really know what's going on. They want people to go out and spend and not save. And you only have to look as far as near 0% interest rates to realize that they want people spending and not saving. You don't get any interest on your deposit in the bank for saving. And when you go out and swipe your credit card, that's what they tell you is a strong economy. Oh, look at all this spending. Look at these record profits from these corporations. Isn't the economy great? But you know that. You know better than that. I think probably 99% of you on this channel know exactly what's going on here. More on job losses. Well, we're going to continue, even if the economy does really recover, we're going to continue to see job losses in the stratosphere. We have more automation, more robots taking jobs. Now we have this report right here that the demand for automated servers at restaurants is surging. And this comes from a Bear Robotics and SoftBank Robotics Group press release. 2 companies making robotics for restaurants have jointly designed a new robot named Servi that will be sold to food service and hospitality companies. And this report says the following: Servi has been developed to be a new member of the food service workforce to assist staff to elevate the overall customer experience. All right, this is going to be another nail in the coffin for the U.S. economy. The U.S. economy was already about 70% service-based. We're talking servers, customer service people, button pushers, pencil pushers, order takers, agents, and now we're seeing more and more and more automation. So where is the recovery going to be when you have the robotics? Half of the small businesses wiped out in many areas. No jobs means less people spending. Less people spending means a service-based economy is going to see less business, and that's even more jobs that are going to disappear and not come back. All right, somebody give me a silver lining. I'll be glad to listen. Let me know down in the comments, are you seeing something different, or should we all buckle down for this recession to continue to get worse? I think you know the answer. Most of you are on the same page as me, but I'd like to hear from you down in the comments. Thanks everybody for watching. We'll be back with some more updates starting tomorrow and this week. Try to put out a lot of reports for you. Thank you so much for your support, for being here. Everybody stay well, stay safe, stay prepared. Peace.